Starting. All right. Hey, what's up, everyone? This is BTC Jack Sparrow. I'm here joined by Don. Don, how are you doing? You are watching Don and Jack live.
I'm doing well, man. Nice Wednesday morning. Can't complain. How are you doing, boss?
I'm good. Yeah. Trying to get settled back at home again. We moved away from Portugal. Unfortunately, our time there was limited, and we're back in business back at home. So I'm slowly transitioning back into my own place and getting set up the office. So it's going to be a little bit bumpy last week and for like the next week to come. I also ditched my bed because it had to be replaced. So I'm still waiting for the delivery of my new mattress, which is going to be awesome. But yeah, it's going to be sometime next week. So it's going to be a little bit bumpy over here for the next couple of days. But by next week, I should be settled just before I actually leave to see you guys for consensus. So I'm really pumped for that, man.
I'm excited, man. I'm excited to meet up with everyone, especially you. It's been a while, so.
Yeah, man. When was it last time we saw each other? I think it was in September.
Yeah, September. Yeah.
Yeah, I'm super excited for that. All right. So
what do we have for today?
I think it's good to do some market overview. The market has been slow. Hasn't been a lot of movement. We saw a little bit of a pullback over the last week. And then some consolidation. So I think it's key that we try and review how the market currently is looking. And I don't know, maybe it's good to get an idea of where we see price action go. What do you think?
Yeah, I'm down. Let's jump into it. And then if anybody has any questions on anything specifically alt-wise, feel free to write something in the messages and we'll get after it as soon as possible. But yeah, do you want to lead us off? You want to jump into it?
Yeah, I think I'm just gonna start sharing my high time frame story and overview, and then try to go down to the low time frames for Bitcoin. And then maybe you can take a look at ETH afterwards. I have an idea of where ETH BTC might be trading towards, so we can have a little nice discussion about that. Maybe we should talk about our ADA trade and do some hindsight reflection on that trade, because
we could do that.
That thing went to shit.
Yeah, that was I should have listened to you. I should have taken your consideration, but yeah, definitely we can go over that. That thing went to shit as well. So but there's definitely some seller exhaustion. So
let me see.
I see what you did there.
Where do we start? I think I want to start out with this little window here. So what I've been developing a couple of weeks ago is a way to determine average entry or average weighted prices over a longer period of time on any asset that I have volume for that I can trust. So Bitstamp is an exchange that I do think has legitimate volume. Bitwise report has indicated that Bitstamp is one of the genuine exchanges amongst like Binance and a few others. So basically, what I'm looking at on a high time frame to see a reversal happening is I want to see a certain average price between a very important swing high and a very important swing low to actually get touched by price. So let's assume that some very big market participant or market participants together are taking shorts, and then they get an average price between in a certain period of time. So let's, for example, we had a swing high in July of 2018. The swing high traded all the way up to $8,463-ish dollars, and then it started to come down again. We had our breakdown, our capitulation, all the way to $3,100. Okay, so what this purple line here represents is our average price since its genesis. And the genesis here for this purple line, if you can see it, is around the swing high. So it's been tracking the average weighted volume price since that swing high. And what I want to look at, and what I found as an analysis to be very reliable as a tool, is to look at where this average price was at the moment we hit our important swing low. And our important swing low was at $3,122. And basically prices here was at that, the average weighted price back then was $5,520-ish dollars. And in general, once you start trading from an important swing high to important swing low, and then price comes back into the average between the swing high and the swing low, that is a signal of strength. That means that whoever took shorts is no longer defending that average price, which means they arguably closed a part of their shorts, like the first half of their shorts, and took profit on them, and potentially confirms that they are actually net long. And if they are net long, and if they are in a good position, will they sell their position so you average, like the average trader can buy the dip? The answer, in my theory, is no. They won't let you buy the dip until you buy their position and they're selling you their position. So basically, the fact that we traded all the way up to this point, and the fact that we have a liquidity gap between 6,250 and 5,600 is, for me, a reason to believe that this market wants to trade higher, especially considering that the average prices that have been paid since the bottom have been respected very nicely. So that's my high time frame overview. So I do think that before we see any retrace, we at least need to cover this little gap here, potentially all the way up to like 6K plus. It could be 5,700, it could be 5,800, it could be 6.5K. I honestly have no clue, but the fact that price traded all the way to the average price between the swing high we saw in July of 2018 and the swing low of December 2018 is a bullish signal for me. And if you follow this green line from the swing high in May 2018, we currently already tapped that. So the average, the current price is at break even. If you still kept all your shorts that you took, and if you bought every day, like relative to the volume since May 2018, you would currently be at break even. So I'm pretty sure that profit was taken on these shorts, and there's a good possibility that currently they are net long. So yeah, I mean that's high time frame, and then low time frame, there is I always like to look at the 4 hour.
Yeah, I got something similar to that too. I'll show after you're done.
Yeah, so this orange line here is basically our average weighted price of Bitcoin since a very important swing low right here. And as you can see, it has been respected very, very carefully here. So for now, the average entry of big money has been protected, and this purple one is more of a, you know, it's more a recent one that just before the breakout. And as you can see, it was respected too. So these lines are defense lines, and once they get broken, it is reason to believe there might not be any position left to be defended, and big money might have flipped short-term bearish, longer-term bearish. For me personally, I do believe that if we break below this red box here, I'm going to be midterm bearish, and that. So basically, if price gets to trade below 4,700, it's a bearish sign, because I was working on this other chart. Let me see if I can find it.
Yeah, I got the same, very, very, very similar conclusions with.
Yeah, you see this chart. So basically, if you look at the monthly, the liquidity, if we start trading downwards, if we break 4,700, which is the average entry in that $1,000 candle, the liquidity is only going to be like the last swing low is right here. It's 3,100. There's no stop losses on the monthly. So if we start trading lower, everyone's going to start buying the dip all the way to 4K, but I do think people will be buying a bag of bricks that's going to trade to yearly lows, honestly. And as you can see, back in 2014, 2015, the liquidity, the most recent swing low was not that far off price. It could tap it, and once it tapped it, it started on a bull run. Right now, if it were to tap the liquidity on the monthly time frame, it would have to go below 3,100, which is the reason, if we don't trade above 6K first, I'm not going to buy any dip to 4K or whatever. I'm going to be net short from 4,700 downwards and keep it until we at least hit 3K. And then maybe I will flip bullish again. But I think it's going to be a very bearish thing if that happens. So for now, I do believe that the way is up. That's my 2 cents. But maybe you can share your thoughts on that as well.
Yeah, I can. I'll go ahead and share my screen here. All right, so I posted this in my channel as well. Like, this is just my brief analysis. So what I'm focusing on is these 2 ranges that we've established. We got December highs and lows over here. We've seen an expansion move. We've created a new range that we've been trading in for a little while now. We've seen some, liquidity be taken from the upside. We have a daily bearish order block. We've seen a hard rejection off its equilibrium. But there's still some liquidity at 56.90. This gray box that's above is, a resistance that I believe I don't see price getting through completely. So you notice how this is a daily bearish or daily order block that we were, represented as support for a little while now. We, continuously traded off that support before we completely broke through. So it's hard to imagine that when we do trade up, that we break this 6K region. I expect this to serve as very, very strong resistance. So
what do you think? Like, let's assume this theory that people are going to short it, and so where will they place their stop losses? If big money wants to trade lower, they want to overtake. They want to take that liquidity that all the retail traders who short early are going to provide. And at what point do you think their stop loss will be hit? Where would they place their stop losses? That's kind of like my theory, that if Bitcoin is going to trade lower, there's this first like 5,690 level, which has like a stop, which is obviously a stop level. So either we don't even get to the gray box there, we don't even get into the gray box, and we reverse before the gray box, or we fill that gap, because there's literally like a giant liquidity gap if you think about it in that gray box of yours. So then where are the stop losses? Where will they cause maximum pain?
And that's a really good question. Maximum pain would probably be up here, to be honest, because we're going to trap a bunch of people. Wouldn't you say?
I mean, like, I honestly think that maximum pain is above those swing highs before we broke down 6K.
Like right up here, like 6,800?
It could be 6,250, like 6,300, 6,550. There's a couple of swing highs just before we came down that I think might be targets eventually. But it really depends on how much people, like how much liquidity is there, and how many buyers there's going to be. It would be the most funny thing ever if it, like, imagine.
Yeah, no, that would be interesting. But yeah, now if I'm digging in on this on a lower time frame, so here, look at this 12-hour range that we've developed. So what I'm looking at here is there's a lot of sell side liquidity, right? We made this move, this daily move that we've seen from that tether news and whatnot. If you look at this daily move, we actually closed slightly below this equilibrium, correct? But we actually closed above this equilibrium of this bullish block, which is 5108. That's our EQ. So we closed above. We've seen no daily close below that 5108. Continued to trade a little bit higher. We touched some, the EQ several times, and we traded higher. Our breaker here is serving as resistance. If we get through there, I think we're gonna go trade higher, 56,700 or even 56, to be honest. But I've been keeping, like in my channel, I've been keeping a close eye on the sell side liquidity, because after this move, I really don't believe, we just ran the highs. So right now, what I'm looking at on this daily, there's a potential, daily swing failure where we go trade lower. We took out the highs, we go take out the lows. Okay. So that's, we could be bullish here, guys. And, I'm not saying if we do see that move and we go down and take out these lows, that's bearish. We could take out these lows, regain control of this EQ and this EQ of this block and go trade higher. So that's my vision behind this. And, I recently took a scalp short here in this region because I do still think the sell side liquidity needs to be taken out before, big money, if big money wants to enter some more, they're going to be entering down here. Correct.
Mm-hmm.
So that's why I don't believe we're just going to break out just yet. I think we're going to continue to range and quite possibly take out these 49.60 lows before we do trade higher. But yes, a bullish invalidation like Jack recently said would be, a clean break and close below, right? And then we would probably more than likely trade a little bit higher, get rejected here before we go back into December lows and highs.
Yeah, I mean, it's very obvious that to assume that at that point there's going to be a lot of buyers who are going to buy into the dip. But if we don't trade higher first, I don't give it any chance for I think it's going to trade way lower at that point. So that's also why I'm fairly bullish, because I do think there has been a very large accumulation ongoing between 3 and 4.4K.
Right.
That's just, like they're not going to give up on that position just out of nowhere. And then if you look at the Soros candle, if you look at the order flow on tensor charts, and you look at actually what happened, we had this giant cascading stop, which propelled us beyond 4,700 straight away. There was almost no liquidity needed. There was almost no volume needed to push us from 4,200 to 4,700. And at that point, if you look at the spot exchanges, some big buyers stepped in at 4,700, 4,800. Yeah. They kept price. If it was just cascading stops, price would have retraced to the breakout level, and it would have been just an overtake of liquidity, and we would have been trading lower. But the fact that they kept that price right there and they started buying so heavily makes me think they were in a position and they wanted to make sure that we're gonna keep on trading higher. And there were a lot of people who started providing liquidity after that $1,000 candle. So at around like 5,100 and 5,300, we saw another impulse of big money buying, market orders. I always like to track spot exchanges and look at the market buys, because honestly, there's two ways that big money operates in this market. They either engineer liquidity by running stops, or they just smash the buy button if some idiot provides a lot of liquidity, or multiple idiots provide a lot of liquidity on the book, and then they just buy it. So sometimes those wicks you see on top of candles, they're not always bearish. It might have just been someone who market bought a lot because there was a short-term opportunity where someone provided a lot of liquidity on the books, and they thought, hey, we need liquidity. We cannot get in and out of positions that easily without moving price too much. But if someone fills the books with asks, with sell orders, and it's a lot of them, it's their, they snipe it. They want to get in on that liquidity. So,
I'm with you for sure. Absolutely.
It's interesting. And like we have this situation developing on ETH/BTC within, I think I've sensed a lot of bearish sentiment on alts after that retrace we've seen last week. But if you look at ETH/BTC, there is this possibility of like we're consolidating around these prior lows, which is weird, because if you're bearish, you would see continuation below the lows. It would get rejected. It would flip, like the previous support would flip to resistance, and it's not necessarily happening. Can you show me and tell the guys who are listening and the girls who are listening what ETH/BTC is looking like for you?
Yeah, no, for ETH/BTC. So this is one I've been watching for a little while now, and it looks obviously it looks a little different than ETH/USD. ETH/USD is the derivative of that. So recently we saw this move break down this equilibrium. We actually took out these lows, which is quite interesting. I think that's what they wanted to do, is take out these lows. I don't believe we'll go to touch range low, to be honest. I think this is as low as we're gonna get before we do move higher. There's still a possibility that we move lower, but I think this is where we're halting, and we're gonna see some upside here. So it's quite interesting, because if you look at ETH/USD, it just recently made this nice dump into perfect demand and traded back into our intra range. So, for me, it's beginning to look a little bit bullish, but I'm not, fully hesitant yet. What is your stance on that?
Yeah, let me share my screen. Here we go. I think I have the chart right here. It's not as clean as your chart, but let me switch down this indicator. The thing I'm looking at right now is pretty much what you were showing with these lows that we've seen in January and February. We swept them, but we kind of started consolidating right here. And oftentimes when price swept a high or a low and then starts consolidating, it's a reversal sign. It's trapping liquidity on the other side of the high or the low. And yeah, you often see a reversal happening there. So for me right now, what I consider confirmation of bullishness would be to reclaim anywhere between 0.0308 and 0.0317. So basically the upper half of this green box right here. The upper half of this green box, preferably have a little close above 0.0317 and then a retest. So that's where I'm, if you're aggressive, you actually buy on at 0.03. I mean, right now, like spot, you would,
right.
Your invalidation would be, it would actually be somewhere below these lows right here. It would be, let's see. I haven't thought about actually entering spot here.
Hey, and Jeffrey Scott, to answer your question, why are your fibs not anchored off the direct low? I use my fib extensions off of just to create my ranges. It's not actually strictly for the fibs, using 0.705, 0.79 OT. I do know how to use them. They're just how I trade. I trade in ranges, high time frame range to intraday range. So it's not what you think.
I mean, and don't forget about the fact that this price action on ETH/BTC looks very similar to what we've seen on ADA before ADA started running off 1,200 sats to like almost 2,000 sats. It looks very similar. And so right now, like literally your invalidation would be maybe like 7 or 8% below spot price. And I do think that if we reverse here, we're going to take out all of this liquidity above, and we're just going to trade into this, at least into this level here, like the expansion level of this consolidation here when price started to accelerate downwards. I mean, obviously there's going to be resistances along the way, but it's most logical to at least go above this swing high here if we're bearish, and probably we're going to go a lot higher. So if you think about it, the risk reward is very high. So you might lose the trade. We might lose this trade if we take it, but the RR on this is like 7 or 6 or whatever. It's insane. So yeah, I mean, if you're conservative, you're gonna be waiting to reclaim this weird structure here. But this very much looks like a fake out into a reversal, and the funding on USD started to flip as well. So I think. Yeah, I do think like I'm gonna be waiting for a bit more confirmation, like I said, because I like to trade. I like to get 80% of the move instead of the whole move, and have more confirmation to it. Like if we can see a little move back above 0.0317, I know there's money interested in driving this thing up, and I'd rather follow the institutional money here instead of
Right.
It's like with ADA. So if we take the ADA trade that we talked about 2 weeks ago, that's a perfect example of how, from a technical analysis point of view, that could have been a really great entry, but sometimes waiting for confirmation is key to see whether there's actual interest in the asset.
True. No, you're absolutely right. And in the ADA's case, that would have been, the play to move, and you would the way to go, to be honest, because we would have seen that there was no interest.
Mm-hmm. Yeah, you want to take a quick look at that?
Yeah, for sure. Cool. So yeah, I was looking for here is, recently we created this range. We broke out of the range. I was expecting some hard resistance there, but we actually completely broke through, and we were trending downwards, and I was expecting this breaker to serve as support. Well, we actually just completely demolished that support, and it didn't even act as support. It literally just went right through it, and now we're trading back within range, near this equilibrium as well. So I mean, we're beginning to see some seller exhaustion here on a little bit lower time frame. So I'd expect ADA in the coming weeks or so to see at least some type of upside, but definitely waiting for confirmation was the move here.
Mm-hmm. Yeah, I mean, ADA right now, this is exactly the level that I was going to be waiting for in case that first level broke down, like 1200, 1250. That was, that is always, in my opinion, always nice to look at a level where price started to expand very aggressively. And if you draw a fib of that last swing low before we had that rise all the way to 2000 sats, can you tell me no, not that one, the one before the big move?
Oh, the one
so
before.
Take the swing low.
This one?
No, way later, like the one at just below 1180, before we started to break out of the consolidation range.
Right here.
Yeah, that swing low to that swing high.
Got you.
So can you tell me where price currently is? Look at that, baby.
Hold on 1 second. Where that high is at 1944.
So I mean, we traded to a very interesting level here, and it should bounce. Like if it trades any lower, I'm definitely gonna be more conservative, but I think it's worth longing, actually.
Yeah, I mean, your espresso, please. Thank you. Sorry, got me an espresso. But yeah, you notice that we actually, traded right through 0.5. We traded right through the 0.705, tapped 0.79. That's our OTE. Like you said, I expect some upside here, but where are we going to get it? And especially with BTC's current price action.
Well, I would trade this right here because it's such it's a larger retrace.
So if you trade this, where do you put your stop?
I would put my stop below the swing low. So I would take low leverage. I would enter right here, and I would have my stop loss somewhere below the swing low that we just
swing low.
Yeah, the swing low in March.
Right.
And I would at least trade it all the way to the first red candle that pushed us back down.
Yeah, something like this, just slightly below.
Yeah.
Maybe pick some up at equilibrium, targeted this high.
I mean, I would. My first target would probably be around that large weekly doji.
Yeah. Certainly, that makes complete sense.
So I mean that's decent RR. Even if you just take this trade, it's still decent. It's like 2.5. I wouldn't be, in your stop loss is really wide in that case. So I mean, I don't like trading low time frame bullshit on illiquid altcoins. You know me.
Yeah.
But it's interesting.
Another one to keep an eye on is, just real quick, I'll jump into this real quick, is AGI. So what I've actually seen here, I've been keeping my eyes on this bad boy. Recently we took out our highs here. We couldn't get all the way to supply. We actually traded lower, took out these lows. And we actually tapped some crucial. Look at this daily where we pivoted, where this big move actually happened to go tap this supply. It never got back tested. Notice this, we just completely moved out of the range, and we're finally getting there. We finally got there, and it's respecting it. Look at this on the daily time frame, sitting there. So I'm watching ADA here and see what it does. I'd like to see it regain control of this EQ. Look to buy a back test. What did I say?
ADA.
AGI. So that's what I'm looking at. I'm looking for price. I'm not buying yet. I'm looking for price to regain control of this low, consolidate a little bit before we take it to at the very least EQ at 1084, and quite possibly even this range high. So keep an eye on AGI here. I know a lot of people like this from a fundamental perspective and trading perspective. I mean, look at this massive run, was huge. And we're just now back testing that crucial daily block. What were we going to say? But, I won't discount the fact that's why I have this low here, that 533. A lot of these pairs we've seen lows been taken out before it goes trades higher. So I'm not discounting the fact here that I haven't made a trade on this. That's why I'm waiting for that price to regain control of this low to at least signal somewhat of some strength there. If not, I'd imagine we go take out those 533 primary lows.
Yeah, I mean, if I look at this chart, I think it retraced far too far for me to take any position on it right now. And
no chance. No chance.
Such a weird chart if you think about it.
It's really weird, really weird, and it's tough because I don't know. I like this project, and I'm not being a buyer. I'm waiting for further confirmation. I'm playing this one a little bit differently.
Yeah. I think I lost one of my. I had this. All right, let me grab my Twitter real quick.
What's interesting? Yeah, go ahead. I'm gonna stop sharing. There's really no weekly. There's really no on the sell-off. There's no weekly supply until up here. So we're above range, like up here. So I mean, if this thing can turn around and source some power, this is where I would look to take some profits. I'll stop sharing my screen. Go ahead.
Mm-hmm.
Do we have any questions? Let's see. Hi guys. Okay.
All right. So when there is a bear market potentially reversing, it's always very important to start looking at fractals, patterns, and one of the patterns that I've been using a lot during the bear market are descending broadening wedges. So it's basically a wedge that gets wider, but it follows a bearish trend. During bear markets, you will almost never see its little twin brother called descending broadening wedge. But once you start seeing ascending broadening wedges, it's a signal that a bear market might start reversing. So we're currently looking at a screenshot that I thought I had this chart somewhere saved, but I must have deleted it. We're looking at the S&P 500 futures, the 4-hour PNF chart right here from 2009, 2010. And this is the bottom structure of that. And basically, an ascending broadening wedge is a 50-50 bearish pattern. It oftentimes breaks down 50% of the time, but it's almost always a continuation after the breakdown. So it kind of like, it is this wedge, like this coin that goes upwards, becomes wider and wider and wider. And then oftentimes either it breaks out or downwards, but it retests the liquidity of the bottom. And then it starts trending and really reverses into a bull trend. And I've been finding this pattern a lot on quite a few bear market reversals on various assets. And there is this chart on BTC. If my screen loads, come on, baby. Oh yeah, here we go. You see how similar this looks? Like potentially could be similar. So there's no confirmation yet, but if we compare this chart where we had like an expansion level right here, and then we started to trend down, and then we retested it, and that was like the top of the ascending broadening wedge. It broke down, and then it started the bull market. This took literally a couple of years to actually completely form. It then, after breaking down the ascending broadening wedge, it retested the liquidity down here, and then it started to trade above this level right here. So it took out a swing high, started to consolidate around that swing high, like we just talked about on ETH BTC, and then it just, you know, like it traps breakout traders, and then it just dumps back into like the mount right here, and then it starts the bull run. And I do think that we might see that form over the next 9 months in BTC too. So like another high time frame perspective on my side is that we have this strong expansion level here. It could literally be the level we're going to trade towards and form an ascending broadening wedge, then which is going to be like, I don't know, like 6.2, 6.3, 6.5, whatever. Then break down of the ascending broadening wedge, retest the liquidity here at like the mid 4Ks or maybe even higher 5Ks, and then tap the liquidity above like 7K range there a little bit, trap some breakout traders, then break down one more time, and then start a bull run.
Mm-hmm.
So yeah, keep that in mind, because this chart is something to keep looking at for your high time frame perspective, and it's going to be interesting. I'm really starting to like the market again, and I do think that alts at a certain point in time, very soon, are going to be bullish as fuck. Because, you know, consensus, and last year consensus was all, you know, like we were promised big bull runs, etc., but statistically, consensus has always been a very nice moment, except for last year. So I mean, it's going to be so epic if we're at consensus this year and everything starts pumping. I mean, I would be so grateful. Yeah, so do we have anything else to share? Do we have any questions? Hey, Bart, how are you doing?
I think we're good.
I think we're good too, man. Yeah, let's wrap up. I hope you guys enjoyed it. If you have any questions, please check out our Discord. Please like and retweet and whatever if you like our content. And maybe it's time for us to start structuring our live streams a little bit again, around a certain educational format. So we might be working on that in the next couple of weeks.
Stay tuned.
Anything else you want to add?
No, I think all is good, man.
All right. Well, guys, peace out. Have a nice one, and see you next week.
Take care, guys. Have a good one.